Welcome to this week's edition of Reverse Mortgage Weekly, where we talk about the reverse mortgage program, talk about things that people really like about this program, and things that people don't like about this program. But the main subject and what we aim to do every single week is shine a big bright light on this subject so that people know all the details, because there's a lot of misinformation out there about this program. And we've talked about this a lot in previous live streams. Really, I think that where it stems from is, we're working with a protected class, older adults, people who are 62 plus. So I think that whenever people see a program that's designated right for that age group that is not a part of Medicaid or Medicare or things of that nature, not health related, that it seems like it's it's got a dirty underbelly, and it's there's all these dark things about the reverse mortgage program. But so that's why we're here. We're here to dispel all those myths, and I can tell you with 100% certainty that the second I'm eligible to get a reverse mortgage, when I become 62, ways off, but I know time flies when you're having fun. But the second I become eligible for a reverse mortgage, I'm running down to the bank to get one. Not only because of what I've seen it do with my clients' lives, but just because I understand the math behind it. Math is fun, right? So let me go ahead and get started here. We'll go right into the presentation. Once again, my name is Zach Smith. I own Chariot Financial. I've been doing this for 21 years. I focus mostly on reverse mortgage. That is our specialty. Although we do offer loans, regular financing loans, 30-year fixed, 15-year, commercial loans if need be, FHA, VA. So we do, if you need a loan for land or anything attached to it, you can give us a call. We're happy to help. Chariot, mychariotloan.com or chariotreverse.com. So what are we going to cover in this presentation? Well, we're going to cover who typical clients are that we see for a reverse mortgage, what a reverse mortgage is, and what a reverse mortgage is not, why people are choosing a reverse mortgage, and how do they work in simple terms. And again, that's one of the things that I really try to focus on with all of my clients is education, especially, first-time home buyers, things like that. Buying a home can be a very tumultuous process. Well, it seems like it is because, it's this like big scary beast, and you're like, oh my gosh, what's going on? But once you dissect things and you take a look at it and you're able to look at it from an objective point of view, you find that things really aren't that scary about mortgage financing. One of the questions, just to kind of give you an example, if someone's paying like 35, like, I have a client paying $3,500 in rent every month. And I ask her, what are you paying for rent? $3,500. And, she's looking to purchase a property. And so, the response I usually have for folks is, well, you're already paying a mortgage. If you're paying rent, you're already paying a mortgage. You're just not paying your mortgage. So that putting things into the perspective really changes people's point of view, because then they understand, holy moly, you're right. I am paying someone else's mortgage, $3,500 a month. No investment into myself. So those are the type of things we look to do, is to educate people so that they can make sound decisions for their future. So who are typical clients that we see with a reverse mortgage product? Well, we see older adults that are looking for an increase in cash flow. Number one client. Generally, clients are coming to us because they're getting squeezed, especially with inflation and things like that. And I know numbers are going down, but gas prices are going down as well. There's a lot of good things going on right now, I think. I'm the eternal optimist, though. But basically, people who maybe don't have the same cash flow that they did when they were working, things of that nature. So they're looking for additional cash flow. And the thing about that is equity. Equity is great to have, but it's a lot like having a glass coffee table right there in the middle of your living room full of cash that you can't get to. So it's great to have equity, but it doesn't do you any good in retirement because it's not liquid. So older adults, we also see older adults that are in relief from high monthly payments for things like a mortgage, think about not having to make that mortgage payment out of pocket every month. That's a huge advantage. Great way to achieve peace of mind with this program. Also, credit card debt. Boy, some of the credit cards, 25, 30% people are paying on those right now. Car payments, those are also another thing that people are, it's not uncommon for me to see clients with almost $1,000 in car payments. It's not uncommon for me to see that. And retirees looking to establish a safety net for unforeseen costs. Many of our clients, in fact, I was speaking with a client today, owns his home free and clear, but he's looking to have a little bit more cash, maybe have a safety net for him as he ages in his place. So creating that line of credit is going to be a huge benefit for him. And people love that program because if you need money, you can just take it. You just call up the lender, and a couple days later, it shows up in your bank account. And many of these have, online services and things like that. Some folks prefer just to give people a call. But that's a great option for people because it does give you that peace of mind. And especially if you have a lot of assets, if you're looking to try to keep your assets in the market, realize that rule of 72 and kind of make sure that you can pass on a high net worth to your heirs. Being able to avoid pulling from those accounts is extremely valuable. And a lot of times folks will want to just pull from their home equity instead. So what is a reverse mortgage? I know everybody has an idea of what a reverse mortgage is, but it is a mortgage loan. So, just like any other loan, it's a mortgage. It does have monthly payments. Now, there's a big group that got in trouble, a couple of years back because they were out there, they're advertising all said, we're going to eliminate your mortgage. We're going to eliminate your mortgage payment. Well, it's a little bit misleading to say that because there is a monthly payment on the reverse mortgage, but it is optional. So one of the things that, some of these, financial gurus out there, their whole thing is, the snowball method, all this stuff that they're talking about paying off debt. And once you pay off the debt, you continue to pay it off and you never, you don't deviate from that. You pay everything off, pay it all off. So one of the things that they say about the reverse mortgage, and one of the criticisms of it is, well, you're going to go negatively amortizing on the loan. That you're going to basically have the house make your mortgage payment for you. I don't see how that sounds like a bad idea. Yes, you leave less equity, possibly, but the thing is that cash a lot of times will do much better in your pocket than it would paying the mortgage in the first place. I mean, especially with a 30-year fixed, you're paying 50% of the interest in the first 10 years. Why would you continue to pay that mostly interest over to the bank when you have the option to have the house just make the payment for you? Now that's one thing but the point I'm trying to make is that there is a monthly payment. So if you wanted to do that, if you wanted to jump right back into the rat race and start paying your mortgage down and start paying into that interest, you can certainly do that. So again, you don't have to go negatively amortizing on these programs. You can treat these just like any other mortgage, make a payment every month, do whatever you see fit. But most people, 99.9% of people who do a reverse mortgage choose not to make that payment. And you know what the beautiful thing about that is you have the choice. If you're in a 30-year fix, you don't have a choice. The bank says, okay, you're going to pay us this amount for 360 months. And at the end of that 360 months, we'll release that lien and basically it's your house. So, and I know a lot of the folks out there, the financial gurus, want you to go into a 15-year. The 15 years aren't bad. You pay less interest. Of course, you're forced to pay it down in 15 years, which is good for some. But, I know a lot of folks like the flexibility with their finances. But you are basically dictated to the bank sets the terms and you agree to it. And you pay down the loan based on their amortized schedule, which is really, the deck is really stacked against the consumer in a 30-year fixed, any type of amortization, in my opinion. But if you want to buy into that, if you want to treat it just like any other mortgage, you can. There's no reason why you can't pay off a reverse mortgage. There's no reason why you can't keep making your monthly payments. That's really, really important to people. But the advantage that you'll have if you do set up a reverse mortgage and you do decide to do that, let's say you do. Let's say you pay it down by $50,000. Well, guess what? A rainy day comes or you need those funds for something, you can pull them back out if you need to. That line of credit is still in place. And the line of credit also will grow over time. So it's like having a second savings account. So I think a lot of the critics of this program flat just don't understand it. They just don't get it. And, there's a lot of different camps out there. You have the Dave Ramseys where, they're the pay off the debt. Debt's bad. You never want debt. Debt is the devil. Don't ever have any debt. And then you have Robert Kiyosaki, who is, rich dad, poor dad. Is debt bad if someone else is paying for it? A lot of folks that I help, a lot of my investors, the real estate investors will have properties and, they rent them out. And not only are they getting cash flow from those properties, so they're getting over and above the mortgage payment, but they're having someone else pay off that payment at the same time. So it becomes a really beneficial and a way to build wealth over time. And everybody has the opportunity. And, I really am passionate about helping people get into homes because of that, just because of the financial freedom that I've seen people have over time. So that's a really long-winded explanation, but it's a mortgage just like any other mortgage, except the payments are optional. And if you choose not to make those payments, they're going to go on top of the balance. So there is a chance that you will go negatively amortizing on these programs. But again, some folks are, they're counting on that. I'm one of them. The second I turn 62, I'm not going to hand over my hard-earned retirement to the bank and interest. I'm going to put it in my pocket. I'm going to be able to live off of that. I'm going to be able to create cash flow so that I'm not, crunched every single month. That's kind of my goal. And like Eisenhower said, plans are worthless, but planning is everything. So generally, these reverse mortgages have a line of credit or a cash payout. You can get a cash payout or a tenured payment that's paid out over time. The client I'm working with now, a lot of these are FHA programs, but we do have programs that are available that are outside of the FHA program. They're structured a little bit different. Some things are better about them. Some things are worse about them. But if you're in a condo complex that isn't FHA approved, they're very beneficial. So, I can't begin to tell you how many people have gone to someone else for a reverse mortgage and said, well, they couldn't do anything for me because I don't have an FHA approved complex, or I'm not 62. Well, those two things are not barriers. Those are only barriers for the FHA program. There's a lot of different ways and different proprietary programs that are set up that we can look at to get people what they need. So what a reverse mortgage is not. It's not a government takeover of your home, regardless of what your uncle says. It's not a way to make you upside down on your home. I'll tell you, this is the silliest thing ever. And I hear it from so many people. Oh, you're going to go upside down on your property. Oh, it's a government takeover of your home. No, the government doesn't want your house. They're not in the business of selling real estate. You really think they're going to make a profit on HUD homes? Back in the 70s and 80s, they were selling those for, pennies on the dollar. If we get to a point where, HUD has had to repossess a bunch of homes, it's really kind of the bottom of the barrel. They're not going to get what they want out of those homes, nor do they want to deal with the problem. It's a huge problem for them to have. Same with the banks. Back in 2008, that was a really tough time for people. And the banks, were basically trying to offload these properties that had gone into foreclosure. Families had to relocate. It was a horrible time, to be frank. But it was a big problem for the banks because they don't want real estate. That's not, the government doesn't want your house. They have bigger fish to fry than your house. I hate to break it to you, but your house isn't that big of an investment for the government. They don't want it. They don't want it. It's not something that they're in the business to do. And number two, you're going to go upside down on your property is what I hear a lot with, some of the naysayers of the reverse mortgage. I don't understand that one either. If you go upside down on your property with a reverse mortgage, guess who loses in that situation? The bank. The bank loses in that situation. If they structure this loan and you outlive the loan, meaning that you outlive let's say your house is worth $400,000 and all of a sudden your loan is at $500,000 or $600,000, whatever, you're upside down. They left all of that cash, cash on the table, basically. That's not what they want. Banks don't, go into their conference room and, talk to all their executives and say, you know what, today we want to find out how we can hand over our profits to the normal everyday average citizen. Has anybody got any ideas on how we can become less profitable and hand over cash to the average citizen? I hate to hit you with these truths, with these opinions. I guess we should be, it's my opinion. I don't think that they're sitting in their conference rooms talking to their executives about how much cash they can give the average citizen. I think it's a little bit the other way around, and that's evidenced by amortized schedules, 30-year fixed. I mean, who would sign up for a product where, for instance, if you're got a $600,000 loan at 6.125%, your first principal and interest payment is going to be somewhere around $3,600. Guess how much of that's going to pay off the loan when you pay that? That's right, $600. $600 is going off. You're paying $3,600 on your principal and interest payment, but that first payment, only $600 is going to pay off the loan. Guess where the other $3,000 is going? Who would sign up for a program like that? Guess what? We did. Everybody. That's the 30-year fixed. So it's tough because what other programs are there out there? Who's got cash to put down and buy a $400,000, $500,000, $600,000, $700,000 home? Many people do, but most people are looking to get financed to do that. So again, going upside down on your home is not something that the bank wants. It's not something that they're designing this program to do because it doesn't profit them. I mean, that's really the ugly truth, to be honest with you. It's not profitable for you to go upside down. So, but the way these are structured, is it possible? Yeah. I mean, in 2008, if we have another one of those events and all the property values plummet, there's a good chance a lot of people are going to be upside down. But I'll tell you what, this is going to be the best program that you'd want to be in that scenario. If all the property values plummet, basically you're going to be put in a position where you're in a non-recourse loan. So it's not going to be something that you're going to be responsible for coming up with that deficiency. And it's not a payment-free mortgage. That's another myth that a lot of people hear. And honestly, in my opinion, I'm being a little critical of my own industry. I don't think enough loan officers or companies explain to people that it is not a payment-free mortgage. I think that that's one of the things that they lead with. Oh, you don't have to make a payment anymore. It's, it's a little bit misleading. There's still a payment. It's just you're not coming out of pocket for it. So why are folks looking to do reverse mortgage here? Let me see if I can get a better, oh, that's just me. I'm trying to get a better, no, let's do this one maybe. How about this one? There we go. So why are people choosing these to do these in retirement? Well, I think it's pretty simple. Liquidity is one. That's a huge issue. It doesn't make any sense for you to be in a big $600,000 home if you've got, a tiny little bit of savings and a tiny little bit of income. It's great to have all that equity, that 600 grand. But again, equity is kind of like having that glass coffee table right in there in the middle of your living room full of cash that you can't get to. So, being able to access that equity is a huge, huge deal for people. And secondly, long-term financial planning. This is a great program to use with financial planning. One of the sentiments that I'd like to point out is that of fiduciaries. Folks that are, if you're a fiduciary, that means that you're making all your decisions as a financial planner in the best interest of your client. That means that you're looking at everything to make sure that they have the best retirement possible. Well, where I think some of these fiduciaries are failing a little bit, for most people, do you know what their biggest asset is? It's their house. It's their house, their biggest asset. So to ignore that in a financial planning scenario, in my opinion, is not wise. And it's not, you can't really call yourself a fiduciary if you don't look at everything that's available for people, in particular the reverse mortgage, because of how augmented it is to grow wealth over time, and also keep the survivability rate of people's assets as well. And we'll go over a little bit of that here in just a moment. So home equity and liquidity. Equity is great to have, but again, it's not liquid. It's, again, I love using this analogy because so I'm just going to keep using it. It's a lot like having a glass coffee table right there in the middle of your living room full of cash that you can't get to. It's not like you can take a picture of your house and then go to the grocery store, hand it over to the cashier and say, hey, I got my cart full of groceries here. I'd like to pay for it with my house. I'm good for it. Doesn't work that way. You can't. Equity is great, but it's not a part of your cash flow. So why does this matter in retirement? Well, most retirees are on a fixed income and they have limited cash flow. Most of us don't want to work into our 60s and 70s and 80s. And there's folks that still are. Hopefully I'll still be working. I really don't ever want to stop, Unforeseen medical expenses can liquidate retirement assets prematurely. Still the number one reason why people file for bankruptcy. The reverse mortgage solves the problem of liquidity. The reverse mortgage is designed to help older adults access equity when you need it. Again, if you're sitting in a $600,000 house, free and clear, it doesn't make a whole lot of sense to basically pull from your life savings, your liquid assets, so that you can keep up the property and things like that. Not when you have that equity in hand. I mean, you can convert that equity into cash, which is very advantageous for a lot of people for several reasons. It can also solve it by establishing a line of credit, cash payout, or convert existing mortgage into a payment optional reverse mortgage. So the reverse mortgage as a financial planning tool is something that I think is very underutilized. And I don't think enough CPAs, I don't think enough financial planners, fiduciaries, you guys aren't talking about it enough. I think you ought to start talking about it much more, mainly because there's, trillions of equity in the United States with people that are 62 and over. And the ability to use it to their advantage to create not only safety nets financially, but also create survivability of their nest egg is vitally important to most Americans. And I don't think that enough financial planners, CPAs, people who are making these decisions for people are just not talking about it enough. And guess what? That's not just my opinion. There's been a lot of studies on this. In fact, the research of Harold Ivinsky, Sean Pfeiffer, John Salter of Texas Tech University published an article about the academic acceptance of the reverse mortgage product as it pertains to survivability rates of one's assets when using their home equity in retirement. And this is what they found. They found that, one, that the faster you take the earlier you take a reverse mortgage, the more benefit you're going to receive. And that's just that's very apparent when you look at the numbers. But they also look at, Sachs and Sachs also had a coordinated strategy. They're pretty good, pretty large group. But in every instance, if you do not use home equity in your financial planning, your nest egg actually has a less chance you have a better chance of outliving your funds, your nest egg, which is really a big concern with most of my clients, is outliving their assets. So there's a lot of different types of reverse mortgage loans. The one you're going to hear about mostly, and I mentioned this a little bit earlier today, was the HECM. The HECM is just so what the heck is a HECM? Well, it's a really it's basically FHA's term for a reverse mortgage. It's called the home equity conversion mortgage, and HECM loans are administered by HUD. There's a lot of protections that come with this. They are non-recourse. They also have a bank failure security in there. So if the bank fails, they will take on the servicing of the note. And you would think that it's not possible, but we did have a bank that did reverse mortgages less than 5 years ago, actually close their doors, and they had to sell, liquidate everything. So it does happen. It does happen. Well, we know who this fella is. This is our good buddy, Tom Selleck, and he's quoted as saying the reverse mortgage is just like any other loan. The only difference is how you pay it back. And my gosh, our buddy Tom Selleck and his legendary mustache, he hit the nail right on the head. It is just like any other loan. You basically, the normal loan, 30-year fixed, you pay back every month with interest and principal. With a reverse mortgage, you have that interest and principal being put on the balance of the loan. So if you choose not to make that payment, if you want to make the payment, no problem. Treat it like any other mortgage. But if you have a month where you don't want to make that monthly payment anymore, well, then that balance is going to go directly onto the top of the loan, and it would become negatively amortizing. And at that point, this program becomes the only program that's due the day after you leave the property, whether that's through a facility, you get administered through a facility full time, or if you pass away. That's one of the things about this program is that you pay it back the day after you pass away. So one of those things that is advantageous for people is opening up that cash flow and being able to basically put themselves in a position where they can eliminate their housing cost out of pocket. And for everybody watching this, I would venture to guess your housing cost is probably the highest cost that you have. So to be able to manage that in retirement becomes a huge, huge benefit for folks. Well, that's all the time we got today. I hope you were able to pick something up. If you have any questions for me, I'm very happy to be of service. When I made a decision a long time ago in my business that I wasn't going to focus on my commissions, I wasn't going to focus on, how much money I made, basically, that I was just going to focus on serving people and bringing value to people. So I'm very happy to be of service in any way that I can. And if you'd like to get in touch with me for future reference, you can reach me at chariotreverse.com, chariotreverse.com. That's chariotreverse.com. Thank you very much for joining me today, and I hope you have a blessed rest of your day. Thank you so much.